this morning. John, let's start first off with the one that I think investors are most focused on, which is the decision to buy back up to $5 billion in high yield bonds. These were bonds you took out at the beginning of the pandemic to ensure liquidity. This is a big move, and a lot of people say a smart move. Does it get you closer to investment grade rating?
Yeah, absolutely. We think so. We're executing our plan. You're seeing that come through the performance of the business. And so now it's time to deleverage the balance sheet, reduce our interest expense going forward. And with that, we think it's another good step towards investment grade. So absolutely, it's a positive for us.
John, your capital expenditures over the next 4 years. Now, you've already said you're going to put $30 billion approximately into electric and autonomous vehicle development and manufacturing. $15 billion of that is capital expenditures that you guys also announced last week. Is this the high water mark, or do you look at this rate of investment and say, we don't know what the future holds, but we're pretty certain we're going to have to continue investing at least at this rate once you get back beyond 2025?
Yeah, I think that's just it. We're going to invest whatever it takes to drive our growth initiatives on battery electric vehicles and our connected vehicles. So right now, we've announced the $30 billion for BEVs. We said last week that we'd invest half of that would be in capital expenditures. And what you're going to see is a run rate of roughly about $7 billion a year in cap expenditures. Now, if we need to invest more because we have good growth opportunities that we think will give us a great return, we'll do that. We're not capital constrained. We have the money to invest in our growth initiatives. And as you see now, we're going to work on the balance sheet and deleverage that. So we're going to make the moves we need to make to drive this growth plan and continue to execute our Ford Plus plan.
John, the other piece of news from you guys this morning is essentially an ESG financing plan. Basically, you guys saying, hey, we've got a framework for funding future environmental and sustainability investments, including potentially issuing up to $1 billion in a green bond. Is that how you're going to likely pay for some of these EV and AV projects in the future?
Well, a lot of the funding for our investments will come from free cash flows in our operations. But this framework that we've announced, the first of a kind for a U.S. OEM, is really positive because we get to tie our sustainability plans and actions directly to how we're going to approach the capital markets. And we'll have transparency straight through to what actions actually underpin any financings that we take around clean manufacturing and clean transportation, or work we might be doing to, make people's lives better in underserved communities or improve communities around, our footprint areas where we have our facilities and our offices. So we really see this as a positive framework because we're seeing a lot of interest from asset managers in this space. And so with this framework, we think it's going to be a positive for us to be able to satisfy the needs that they have and also bring us some lower cost financing for us as a company and lower our overall cost of debt.
Hey, John, it's Deirdre. I wonder if Ford can move even further down the supply chain model like Tesla has done by producing potentially your own parts and potentially batteries. Do you foresee even eventually skipping the dealership model to increase your margins?
So when you look at what we've learned from the chip shortage, we're definitely going down into the supply chain. We're understanding where capacities are down at the fab for semiconductors. We're looking at securing our capacity down at that level and then working back up through the supply chain. So you're seeing that on, semiconductor chips, but we need to look at memory chips. We need to look at batteries. All of our advanced componentry, we are going to go much deeper into the supply chain. And we'll even look at vertical integration if we need to, if we think that's the right move for the business. So we're busy changing how we're looking at procurement, how we're looking at design, learning from this situation and making those adjustments. So I think we'll have a much better approach as we move forward.
John, interesting debate going on right now regarding EVs and tax credits and what's really necessary to grow the market. Obviously, the economics of EVs are getting better all the time. Demand is already outpacing supply. Do you think they're deserved? Separate from the infrastructure part of chargers, let's say, do consumers need to be encouraged at all beyond what they're already doing?
Well, we're seeing great demand as it is today for our battery electric vehicles. Mustang Mach-E, we think demand for that's over 200,000 units a year. We have 160,000 reservations for the Lightning. So we see demand being strong for these vehicles. E-Transit, our electric van that we'll have out next year, that's sold out as well. But I also think that when you look around the world and you see where governments have supported the transition to electric vehicles, you see an adoption rate being much quicker. So I think it's a combination of both that's going to allow us to move forward and meet our commitments as far as CO2 and some of the stakes that we've put in the ground to move forward on that front.
John, it's Phil again. Yesterday, you guys announced to all of your salaried employees here in the U.S. that they should be or will be required to be vaccinated by December 8th, or they could potentially be facing some type of an unpaid leave. How many people right now, what percentage of your salary employees are vaccinated at Ford? And are you concerned that there's the potential for some hiccups as you get towards December 8th and you may have a sizable contingent of employees who are not vaccinated?
All right. Well, the well-being and safety of our employees is our first priority. 84% of our salaried employees as of now are vaccinated. And so we're a federal contractor, so we have to comply with the rules. And that means that by December 8th, a majority of our salaried workforce needs to be vaccinated. And, you know, if those that don't have accommodation for either a medical reason or religious reasons aren't vaccinated, they could be facing unpaid leave. So we'll have to continue to work this. But our goal is to have, you know, our employees vaccinated, safe environment for them, and work through that as positively as we can.
John Lawler, CFO of the Ford Motor Company, joining us today from the company's headquarters. I believe he's at the company's headquarters in Dearborn. John, thank you very much. Deirdre, I will send it back to you. But before I send it back to you, I want to show a chart of Ford over the last 20 years. And you might be saying, why are we looking at Ford 20 years ago? Well, shares last topped $19, and they briefly traded above $19 today. But the last time they closed above $19, September 10th, the day before 9/11. Jack Nasser was the CEO back then. Deirdre, back to you.
Thanks. I'm focusing on that 16.8% number. That's its return in 20 years, too. Phil, thanks for bringing that interview to us and those facts. Speaking of EVs, let's get a look at NIO. Deutsche says the stock is one of its top short-term picks, despite having materially underperformed just about all of its closest peers for the past 3 months. They're raising their price target to $70 from $60. Shares are down 7% since August versus significant gains from competitors like Tesla and XPeng. Deutsche mainly attributing the slump to NIO's struggles with the chip shortage and a lack of new products. Though the ramp up in marketing of its new flagship ET7 sedan and the unveiling of other new products and tech at NIO Day is expected to be the catalyst that NIO needs to turn this thing around. Shares are rallying a little this morning. They're up nearly 3.5%, Julia.
And after the break, never before seen deposition tapes of Elizabeth Holmes will be live at that courthouse. Plus, watch NVIDIA. Wells Fargo hiked that price target almost $100 to $320. Like the metaverse opportunity there, and a lot more tech is straight ahead.
Still looking for that money in your home, Dow?
Yeah, this puppy should finally do the trick.
Well, good luck. We found ours yesterday.
Let me guess, in the